Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the big news today is the US-China trade deal that was negotiated over the weekend. And news of this deal sent stocks soaring this morning. But the story you're not going to hear about in the mainstream financial media is how this deal could be setting up silver for a huge rally. And there are some charts that support that idea that we're going to go over today. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Okay, so this trade deal was essentially a pause to the reciprocal tariffs that China and the US had imposed on one another, the rates of which had risen over 100%. Essentially, it was a de facto halt to trade between the countries, an embargo, if you will. And now the tariffs haven't disappeared completely. Again, this is a temporary pause. What we're doing now is charging a 30% tariff on Chinese exports to the US, and they're charging a 10% tariff on US goods that they are importing. But still, it's a big improvement from where we were. And today, stocks soared on the news. This is a chart of the QQQ. That's an ETF that tracks the NASDAQ. And you see it was a major gap up today from where the markets had closed on Friday. Now, is this rally real? Is the trade deal going to stick around? Well, there are some reasons to be skeptical. The first of which is that you can see here on the volume indicator, this is a fairly thinly traded rally. So there's probably a lot of short covering going on. But if this rally is real, and if the trade deal actually sticks around and remains in effect, this will likely have a very positive effect on the price of silver. So let's take a look at the silver chart. We're going to zoom to the 4-hour chart here because there's a pattern that is becoming very visible on the 4-hour chart of the silver price, and that is that silver is in a symmetrical triangle consolidation. Now, one thing you'll notice is this precipitous drop in the silver price here, and that was initiated on April 2nd, the day that the tariff and trade war really accelerated. And so if tariffs had a very negative impact on silver, and the rationale there being that silver, as well as being a monetary metal and a safe haven asset, is also an industrial metal, so a slowdown in global trade or a slowdown in the Chinese economy where a lot of manufacturing takes place and a lot of silver is consumed is going to be negative for silver demand. Well, the inverse of that is also true, and that is that if now the trade war is over and there won't be this significant slowdown in the Chinese economy and the global economy and manufacturing generally, then demand for silver should be higher than it would be in the event of a sustained trade war. Now, this pattern that is forming, this symmetrical triangle, is neither a bullish nor a bearish formation, but it does suggest that a big move, either to the upside or the downside, is in store for silver. You can see here that the RSI, the relative strength index, is right in the middle, right around 50. So that also doesn't give us much clue. However, if you look at the MACD here, you'll see that that is very much centered around the zero line, and there's not much showing up on the MACD. And this is typical right before a big move, again, either to the upside or the downside. But if the trade deal is in fact a real trade deal, and it's not just a pause and we're not going to see a resumption of the trade war, that would support the idea of a significant breakout of silver to the upside and the silver price rising in a very significant way. Now, another chart that seems to support this is a chart of the gold to silver ratio. And you'll notice that there is this flag pattern that I have highlighted here with these yellow lines. And this is actually a rising flag like this, a bearish consolidation or a bearish range-bound indicator. And it looks like the gold to silver ratio may be preparing to break down out of this pattern. And given the bearish nature of this pattern, that could mean a precipitous drop. Now, that could mean two things. That could mean that the precious metals are falling which is what happened today, actually, where you saw this big drop in the gold to silver ratio and the news of the trade deal. The price of gold and silver fell, but silver fell a lot less than gold did. And that is why you saw the gold to silver ratio, which recently topped out over 105. And that's very rare for the gold to silver ratio to even rise that high. But it broke down today because even though silver was slightly in the red, gold got really kind of shellacked on this news. It was down about $100, I think, on the day. But if we continue to see this break down, that would suggest that either the metals are falling and silver is falling less quickly than gold, or in the event of a rally in the precious metals, it would suggest that silver is outpacing the gains that gold is putting on. So you could see the gold to silver ratio falling in either one of those scenarios. But let's discuss why I think that a trade deal, and again, in the event that the trade deal sticks, that the stock rally is real, and there's some reasons that the investors are a little skeptical of this at the moment. I think we'll talk about those now, has to do with the Fed. But if those are real, I think what we're going to see is a rally in the metals. And given the charts of the gold to silver ratio and of the silver price, it suggests that the breakout in silver higher could even exceed any gains that we see in gold. But let's take a look at this, the CME FedWatch tool. And this is a measure of where investors believe the Federal Reserve is going to place monetary policy and interest rates moving forward. And this is kind of interesting in light of what we are witnessing with the trade deal, because if you listen to Jerome Powell at the most recent FOMC meeting, one of the things that he repeatedly cited as a reason that the Fed was not cutting, that they were leaving interest rates where they were, was uncertainty due to tariffs and the trade war. So you would think that if the trade deal has been arrived at, that would remove some of that uncertainty and they wouldn't be worrying as much about price increases resulting from the trade war. That's why the Fed doesn't ostensibly want to cut rates here. I know, Donald Trump will tell you it's for political reasons, and there might be something to that. I mean, I have no idea what's going on inside Jerome Powell's head. But if you just take it at face value, what he says, and I know that's a, dubious move when it comes to central bankers, but he tells us that he's concerned that tariffs could lead to price increases, and that is a valid concern. So if a trade deal has been arrived at, you would think that that would give the Fed some room for easier monetary policy, which would tend to support the price of both gold and silver, as well as other assets like stocks. Basically just inflate the price of everything. I don't think we need easier monetary policy here. That's going to debase the dollar. That's what they tell us, right? That, uncertainty from tariffs is part of why they're not cutting rates. But, it's interesting. If you look at this CME FedWatch tool, this column right here under 1 day, this tells you where anticipation among investors was the last trading day. So in this case, that would be Friday, May 9th. Today is Monday, May 12th. You'll notice the inverse of what one might expect here has actually occurred, that on Friday, investors were anticipating a 40% chance, and this is for the July meeting of the Federal Reserve, they were anticipating a 40% chance that the Fed would leave rates where they're at, 425 to 450 basis points in the federal funds rate, and a 51.1% chance that we would actually see a 25 basis point rate cut. And they were also betting on an 8.9% chance of a 50 basis point rate cut. But today, after the news of the trade deal has been announced, what are investors anticipating? Well, they're actually looking at a 61.4% chance that the Fed has not cut as of the July meeting, and only a 35.9% chance of a 25 basis point rate cut, and only a 2.7% chance of that 50 basis point rate cut. So even though a trade deal was arrived at, investors are now anticipating tighter Fed monetary policy. So what does that tell us? Well, I think it suggests that investors are wary of this trade deal. And again, it is only technically a 90-day pause to these reciprocal tariffs. So a lot of what was negotiated at this trade deal was a framework for further negotiations to take place moving forward between the US and China. And we're going to still experience some uncertainty for the next 90 days or so as the US and China try to come to some long-term agreement. But if in fact they are able to do that and this trade deal is sustained, then it's very likely that we could be looking at a major breakout in the silver price. And if investors become more convinced that a trade deal will stick, then that could mean easier monetary policy from the Fed and greater industrial demand for silver, two factors that support much higher silver prices. But what are your thoughts? Is the trade deal going to stick? What'll be the impact on the silver price moving forward? And how do you think the Fed will react? Leave me a comment down below. If you enjoyed this video, make sure you check out the one that's popping up on your screen right now. Don't forget to like, comment, and subscribe. Thanks for watching, everybody. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker out.